Good morning. Good morning. Good morning, everyone. There we are. Welcome in. Welcome in. Welcome in. I hope you all are having a great morning. I know this is a bit unusual. We usually do our live streams 3, 4, 5 p.m. But I woke up today and I was like, you know what? I feel like I haven't been on live in a while, and I haven't been able to do a live stream for those of you who are around in the morning. So I know some of you are in here. I've not seen you before, so happy to have you all in today. And what I wanted to do is just kind of talk about the market. Of course, we're seeing something happening in crypto right now that is a little bit concerning. I'm going to be honest, and so I feel like I'm always the damn bearer of bad news. And hopefully it's not bad news, but I have to address it. It's just kind of in my nature. I have to address it. So I want to show you exactly what it is, why I think it's important to be watching. And yeah, all that good stuff. Now, if you are new here, you don't know who I am. My name is Tyler Hill. I'm one of the co-founders of the Crypto Strategy School, which services thousands of students every single month. And I post here on YouTube every day, every other day, just hopefully keeping you as up to date as possible on news, technical analysis, macro analysis, and much more. So today, what I'm going to do is I'm first and foremost just going to do a market analysis. I've actually not got to do my full overview of the market yet today. I wanted to do that with you all. And then we're going to jump into what this thing is that I'm a little bit concerned about. We'll do a little bit of individual technical analysis, and then we'll probably go ahead and jump off. I don't expect this to be a super long stream, but packed with value. So if you do enjoy it, hit that like button, punch it right in the face, and let's get into it then, shall we? So here we go. Looking at everything that's happening in the market, okay, let's first and foremost just got to get an overview. So the market over the last 24 hours honestly hasn't been the best. It hasn't been the best, right? We can see, and there's something coming today. There is a piece of news coming today. I can't remember what it is. Let me know. Something. I can't remember. Let me know. But again, the market's not been the best. We got Jasmy, Hex, XCN, we got ENA, Pi, and many more all down. Obviously, this bad boy has not been looking so good. There was a whole bunch of craziness that happened with Mantra. Looks like a rug pull to me. People can say that it was liquidations, manipulation. You can call it what you want. But if you drop 88% as a crypto that is that big, and you drop that much, I don't know. I don't know. That looks like a rug pull to me personally. So, obviously a lot of bad news here with Mantra. Not looking too good across the market in general. We head out to coinmarketcap.com to look at the top 10. And the top 10 is a little bit more stabilized, but it is down, right? You can see Bitcoin down 2%, ETH3, XRP down 4, Solana down 5. I mean, overall, just not the best day over, just in general. But overall, not too terrible. If we go back out to the week, for example, still a lot of green here. And so that is, one thing that I always try to remind people. I saw a lot of people in the comments saying, or in the school, saying, what were they saying? They were like, oh, it's all over. It's already ended. The pump didn't last, yada, yada. And I'm like, listen, we saw most cryptos. I mean, look at XCN, dude, 100% in a week. Ray, Jasmy, CRV, Floor, or FLR, HNT, like so many cryptos up 10, 15, 20% just over the last week. And look at the top 10, 9, 7, 15, 20. It is normal to see a moment like this where we are getting a bit of a pullback on the day. It is just what happens. You can't keep expecting that crypto is just going to go up, 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 and only up. Of course, you're going to have moments like this, especially as people are continuously leverage trading, right? I've said this several times as well, but every time that we see those pumps coming, guys, and then we get a huge buildup of short side or bottom side liquidations like we did the last couple of days, you're going to see little pullbacks to go liquidate all of these people who are betting too big and betting too much. So I'm not very concerned about the general price movement of the market today. I'm not very concerned about the fact that we are seeing a little bit of red. I think it is super normal. And so I just kind of wanted to throw that out there. Now, this is being fueled by some of the news that we have been seeing because we're just seeing more and more uncertainty in the market. So kind of going through last night or this morning, I believe, this morning's news, we obviously have some NVIDIA news, some Boeing news, and things just kind of heating up still between this US and China trade war. So let's just go ahead and read this real quick. I think it's important. So the world's two economic superpowers are trading blows in a battle that has engulfed the old and the new, traditional manufacturing and artificial superintelligence. Now, the action that played out over the past 24 hours encapsulated the trade war as Washington and Beijing looked to gain leverage ahead of any talks on tariffs. Chinese officials have told the country's airlines to not place orders for Boeing jets, while the U.S. government has informed NVIDIA there will be a license requirement to export previously permitted AI chips to China. So now we're starting to throw some real punches, right? At first, it was kind of just, chitter chatter back and forth, 200%. Like, we had all these things going on, but now we're trading some real punches here, right? Boeing, NVIDIA, the old, the new, everybody kind of getting hit on both sides at this point. And it's probably just going to continue to escalate until something breaks somewhere, if I had to guess. And so, feel about it as you may. I certainly don't like it personally. I do understand that there is a perspective on this that says that the trade deficit that the U.S. has had with China has been rather unfair, and that the U.S. hasn't particularly been treated the best in terms of trade negotiations. And I would actually agree on many points, not all of it, but on many points. And I think most people would as well. But I don't particularly think going to this level of chaos is ever the right answer. To me, this feels like ego battling, and people like you and me have to suffer the consequences of it. And I think that's a little bit frustrating. And as a result of it, obviously, the market is frustrated as well, seeing a little bit of downness today. Obviously, looking at the Dow Jones or the Dow futures, not too bad, but NASDAQ is taking a bit of a hit, down 1% today. And VOO itself currently around negative 0.6% on open. So not terrible. I think the market is just adapting to this. It's getting used to this. People are just like, they're getting used to all of this bullshit that's happening right now between the governments, but it is still going to impact things, right? Whenever you start to see Nvidia taking hits, Boeing taking hits, it is going to send ripples across the sector, especially Nvidia, because Nvidia and the crypto market have a lot of ties. They're both very modern. They have a lot to do with the future, the next era, right? And so a lot of the same type of people who invest in Nvidia invest in Bitcoin. And so you are going to start to see those ripple effects here through the crypto market as well. And so as all of this is happening, we are seeing this pullback mostly as a result of, what is happening here. But again, I'm not super concerned about it. The market doesn't seem to care that much. It doesn't seem to be too worried, as it is factoring in and pricing in a lot of the stuff that is happening right now. But it is pulling back just a little bit as a result. So TLDR on this, not super concerning, but it is worth noting. Now, diving in let's kind of look at what's happening from I'm actually very curious from more of a macro perspective in the market. So we talked about big macro, let's go into minor macro. So obviously we are seeing the majority of the crypto market still in fear, which I think is actually rather optimistic. The fact that we did see the crypto market make a really strong rally back up here, but we are still seeing the crypto fear and greed index, for example, out of 29 and likely going to go down today. I think that's actually a pretty damn good thing. It means the market's not overreacting. It's not going too crazy. People aren't getting too optimistic too fast. Some people are getting a little optimistic, but people aren't getting too optimistic too fast. And so the fact that we're still in that fear zone is pretty optimistic to me. Actually, I'm not going to lie. If we do look at the RSI heat map, we can see here that the daily RSIs for the majority of your major cryptos have now fallen below or at the 50% threshold, which means the majority of your market from a daily perspective is in a pretty decent accumulative opportunity here. And I think the same does apply for the weekly. Yeah, same does apply for the weekly. Most are actually lower, below the neutral zone. All of this basically just saying that the market's not moving too far too fast. And I'm not going to lie, this is actually a pretty good sign. Usually whenever we've seen these moments where Bitcoin did this, or again, like a situation like this, we will typically see, of course, a ton of greed enter into the market right here. Everyone starts screaming, we're going to the banana zone. Everyone gets optimistic, then we crash. Same thing happened right here. Same thing happened right here. But the fact that we're up here now, and we actually got a moment outside of the descending parallel channel, but the market is still in fear, and we are still seeing it pull back, I think is a pretty solid sign that we're actually seeing a healthy movement upwards that's not fueled by over-leveraged greed, which is a very good thing. So overall, I mean, the first 10 minutes of this video have me even saying, sure, it doesn't feel great, but it's actually not all too concerning, as the market is getting used to it, but is still feeling a little bit uncertain. But the macro picture here is actually a good thing to me. And I think that it does align well with the idea that, I've told you all, there's a chance that Bitcoin makes a break out of this descending channel in the move that we're in right now. Like, there's a decent sized chance this was the low of this descending channel, and Bitcoin does try to make a move out of here. And the fact that we've gotten back to the top side of this descending channel without getting over leveraged and over greedy tells me that even if we do pull back a little bit, that we very well might see Bitcoin make this run up here. Now, again, it might not be fast, and it might not be easy. It might be a little bit ugly, but again, there is a decent sized chance, guys. This is like one of the best chances we've had throughout this whole thing. Right now, being at the top side looks way better than it did in any of these other situations that we had back here. So it honestly is looking pretty good to me. So that kind of takes me into the next point, though. The sadly shifted back in the level, in a direction of pessimism, I suppose, is that people are starting to get a little bit antsy. Okay, they're starting to get a little bit antsy. So when I checked my Twitter yesterday, everyone was saying that we broke out, which I found very odd. Let me know, chat. Let me know if on your Twitter or if on YouTube, you also saw people saying that we broke the descending structure. I saw it quite a bit. Let me know if you saw that as well. But I look at this a little bit of a different way. So I think the way that people are looking at this was like this. So I think what people were doing was that they were excluding the wicks. So they were looking at this close. They were looking at, I guess, this wick up here. we look at it, they were looking at this wick as well, and like roughly this close, and they're saying, "Oh, look, we broke out." But the reality and what I've come to recognize over the last 6 years is that not including the wicks is literally just taking unnecessary risk. Okay, so what I mean by that is whenever you draw your trend lines, not including wicks is taking an unnecessary risk unless it's like an outlier. So an outlier looks like what XRP did way back here. Hold on. So like no, no, not really. That's not what I was thinking of. There was another time. What chart was that on? I can't remember. It's not a big deal. But like whenever you're looking at your structures here, excluding your wicks is just a risk that I wouldn't be taking. It's a risk that I wouldn't be taking because when you include the wicks going from 1 to 2 to 3, creating your structure, we've not broken out of it. And yesterday everybody was screaming, okay, we broke out, time to go up. But I'm thinking, I don't think so, because we do still have this macro structure if you include the wicks. And now that we've run into that structure and gotten rejected here, you can actually see what happened. This is the true resistance. This is real resistance here. This isn't just a random level of resistance. And the fact that you have like kind of this declining slope on the closes, meaning you have your equal lows or your equal close highs, your close highs here, and then your current highs here, you're descending like this. What that means is that you have a descending level of resistance forcing the price down to where your closes start decreasing. And so the way that I see this personally is that we are still in the structure. And while everybody's thinking, oh, we've broke out, oh, this may be the moment, oh, we might start pushing upwards, I'm actually looking at this from more of a cautious perspective. Like, hey, we've not broken out of this yet. We still have resistance above us. And if people start getting too greedy right now, thinking that we did break out and this is just a back test, we may end up seeing this market really capitulate. Okay. Because that's what happens, right? If everybody's looking at it from the perspective that this was the breakout and that we're out of it now and that we're about to go up, the exact thing that'll happen is that Bitcoin's price will pull back down. They'll be like, what just happened? This was a fake out, when in reality it wasn't a fake out. It was a macro natural rejection that came back down to say you're 25 or you're 50, and then it pushed back upwards because we never broke out in the first place. And so this is an opportunity for them to liquidate some of these where'd you go? One second. There we go. Liquidate some of these, boom, right here, some of these liquidations below us, right? Because look at it. I mean, look at the liquidations that happened at 82,336. The reality is that we could see that move, right? 82,336, guys, is on this 12.5% threshold. It's just right here. And so we very well could pull back to some of these levels, force some of these liquidations to the downside, and then use that support to push to the upside. And so what I don't want, what I really want to warn you all about, okay, what I want to warn you all about is the fact that we've not broken out of this, right? We've not broken out of this. And I do see one of you guys saying that we did it on the logarithmic chart. I'm on a logarithmic chart here. Okay, I'm on a logarithmic chart, and my structures are built on logarithmics. And on the logarithmic structures here, or charts here, we've not broken out of this. So I'm not saying that we can't. As actually quite the opposite. I've told you all earlier in the video that if we've ever had a decent sized chance of actually breaking out of this, it is like now. It is in this move we're in right now. But we've not done it yet. Right? We've not done it yet. And so everybody screaming that we've broken out is only setting themselves up for the possibility that we will see some sort of capitulation to liquidate those overexcited traders and then push up. Now, the bright side about it is, though, no one's really getting too optimistic. Obviously, there are some liquidations that'll happen here. There's some liquidations that'll happen on the 7-day. Obviously, a little bit more, especially down towards $81,000. But it's not like an insane amount. If you look at the 30-day, for example, guys, there's only $2.2 billion worth of liquidations to the downside. Do you remember... it must have been like 2 months ago when the 30. Oh no, that's totally okay. MJAM, no problem at all. But do you remember how like 2 months ago, this was like 10 billion and this was like 12 billion? Yeah, we're only at like 2 and 3 billion. And so the good part about it is that a lot of the leverage traders who have been causing this market to fall because they're getting greedy in both directions, they are like exiting. They're running out of money. The transfer from their pockets into the pockets of the whales has nearly been complete. And so right now, we're not getting too many people getting overexcited about the idea that we've broken out, but it is something that I'm noticing picking up in momentum, that trend, that narrative that we've broken out. And I just wanted to kind of warn you guys at least, like, hey, I don't think we have. Okay, I don't think we have. And so that is something that I just wanted to kind of throw in there. Again, I know it's a little bit pessimistic, but that is just a reality. It is better to be safe than sorry in this market right now. Because, I mean, think about it. One of the biggest criticisms that I get especially within the last 3 months, is everybody saying, Tyler, you're too overly neutral, right? Like some influencers are too bullish, right? Some influencers are too bearish, and you're just too in the middle. You're too neutral. And the reality is, I do agree, right? Like I do agree. I'm not very bullish. I'm not very bearish at all. I'm just sitting in the middle. And the reason why I'm doing that is because of what's happening. Guys, you got to remember, we were in an HMZ. Shout out to Mr. Nibbles. We were in an HMZ, high manipulation zone, and then we entered into a descending channel. These are two structures that are built to liquidate retail investors. This range liquidates retail investors to the bottom side and the upside. This range liquidates retail investors to the bottom side. And so while the market is consistently putting us in structures that is going to consistently just liquidate people, yet I still believe we're in a macro bull market, I am going to find a point of neutrality. And my point of neutrality is don't do much, let it play out, and then make a move once we have some clarity. So what have I been doing? Yeah, I've been dollar cost averaging anytime we've entered into the green zone. I've dollar cost anytime that we hit this 50% threshold in these little instances right here. And I've taken profits in the red zone. This red box right up here is where I've taken profits several times. And that is not me just saying that. You guys know, if you've been on my channel, that's the game plan. This is why our strategy works so well. And so I know that it's annoying. Like, Tyler, you're always so neutral and you're always telling us to wait. But the reality is, look how well it's done for us. The fact that I wasn't going crazy in here, the fact that I was just DCAing around the bottom side and taking profits around the top side, the fact that I was DCAing around the bottom half of this and taking profits around the top half was the best thing that you could be doing within these two ranges outside of high leverage trading, which is just very risky right now. And so I know I'm neutral and I know I'm always waiting. But again, that has been the best outcome, because had you been rushing trades and rushing purchases, you'd just be negative. You'd just be negative. I'm almost net neutral in this little moment that we've been in here. And so because of that, again, I know I can be frustrating, guys, but it is just the best play here, in my opinion. It's the best play here, in my opinion. Okay. So before we do move on, what I want to do next is I want to kind of give you my strategy moving forward. Okay. I want to talk about what my plan is, what I'm doing right here, because I actually haven't made my moves of the day yet. So I am going to start making some moves in a second here. But before we do that, I do want to, of course, tell you a little bit about what we are seeing from our friends over at CoinEx. So you guys know I partnered up with CoinEx not too long ago. I've been telling you a lot about them. Dude, I think it's like 100 of you guys who've messaged me about, you've checked them out. You started to try out some of the finance options, whatever. I thought that was pretty cool. But what we are seeing actually is something a little bit more time sensitive. So I wanted to tell you real quick. So what we can see here is that CoinEx Mining just announced their lock CET to share 4 million free dogs. So what you can do is you can actually lock some of your CET, which is the native token of the CoinEx exchange. And what they're going to do is allow you to get in a pool of 4 million free dogs. And it's actually pretty dang easy. So the early lock is today and tomorrow, or no, actually over the last 24 hours, the 48 hours. Now the mining has started from April 15th to April 17th. And the way that it works is that there's a total pool of 4 million free dogs. There's an hourly reward of 83,333. There's a minimum lock of 100 CET per person, but I think that's reasonable. And a max lock per person of 50,000 CET per person. And literally all you need to do, purchase your CET to prepare for mining, go to the event page, select the CET pool, and just lock at least 100. And then you're going to start being able to get in on these free dogs, which I think is going to be a really big campaign because they are doing so much marketing right now. Now, as you can see here, mining starts in just 22 hours, of course, with the free dog and CET pool. So if that is something that's interesting to you guys, head to the link down below. Feel free to go check that out. And let me know what you think. I personally did lock some CET in this. Obviously, I'll show you in like a future video or something like this. But I did go ahead and lock my own CET because I want to get in on that. I think that is super easy and reasonable. I already held CET because I think CoinEx is very good. So it just made a ton of sense for me to just lock some of it up to be able to get some free dogs. So feel free to go check that out. Again, I'm going to go ahead. I'm going to add the link to this page right here down in the description below for you right now. So you can feel free to go check that out if that is interesting to you. Just give me 1 second. And obviously, shout out to CoinEx. They've been a great partner to have recently. Check out the CoinEx event. All right. And if you just want to go ahead and give your page a refresh, the link to that this page that you're looking at right here is now in the description. So feel free to go check that out. Okay. So let's move a little bit along. Okay. Let's move a little bit along. What am I doing now? What's the strategy? Well, I think you guys obviously know what I'm about to say, but I am just kind of sticking to my game plan here. Now, what I actually am deciding to do live on stream here is I am going to take a little bit more profit out of my entire crypto portfolio today. Okay. Now, that might sound a little bit counterintuitive. Tyler, why the heck are you taking profits out of this right now if you yourself have been saying that, like, we might break out of it? Because I'm just saying we might, right? I still don't know. I still don't know. And what I've told you all consistently is that this red zone is the best zone right now to be taking profits in. And look at how well that's played out, right? Took some profits right here, took some profits right here, took some profits in this, took some profits right here, took some profits right here. I mean, every single time we've been in this red zone, it's been a great time to take profits. And sure, at some point, I'm going to take profits in this red zone and we're going to go back up. But guess what? When the time comes that we break out of this red zone, I have every intention to let this thing backtest, wait for it to find some support, establish macro structural clarity, and then I plan on opening up some long trades, expecting that we are going to see Bitcoin try to push back up to that golden zone, which could be a decent move. I mean, right now, the golden zone would be a move to $94,000. I think some sort of move, say 10, 11% for Bitcoin is very possible. And so my strategy is simple, guys. Take a little profit right here. If we pull back, reinvest it and get back in, take some more profit when we bounce back up. Exactly what we did there, exactly what we did there, exactly what we did there, right? Now, if we do break back to the upside though, guys, I'm just going to let it establish some macro structural clarity, use it, open up some sort of tiny, small leverage trades, take some of the profit that I took right back here and redeploy it very likely right around the same level anyway. So the upside gain is still the same. If it pumps out of here, my upside gain is still the same, but my downside risk is reduced because I'm taking that profit here and not waiting to see if we pull back here. The reality is that the longer that we sit in this red zone, the more likely it becomes that we do get rejected, right? Even if it's not a huge rejection, usually some sort of rejection will happen. And so I am going to take a little bit of profit today. Now, you may wonder what sort of what level of profit I'm taking. Very tiny. I think I'm going to probably just go in and close down 1% of my entire crypto portfolio. So all my Bitcoin, ETH, all that stuff. Because what Bitcoin does right now dictates what the rest of the market does right now, right? So I am going to go in and just, if I'm taking profit off Bitcoin, I take profit off everything. Just take 1%. Very tiny stuff, guys. Nothing too big. And then allow it to play out. I'm not one to sell my whole portfolio right here and try to buy my whole portfolio. No, guys, I've had this portfolio for 6 years now, right? I don't make huge, gigantic moves. I just take a little 1%, 2%, something like that, take a little profit off the table. And if it goes up, great. I can just reinvest some of it on a leverage trade and cool, let that bad boy play out with a stop loss so I don't really risk much. Or if we pull back, take that 1%, just throw it back in. Why not? Take profits at the top. Buy the same amount for cheaper at the bottom. Very easy stuff here, guys. Very simple things. You don't have to overcomplicate this, okay? And so that's my general strategy right now. So I'm going to do that for Bitcoin. And I'm going to continue to let Bitcoin dictate what I do in my portfolio as long as we are in what is called a Bitcoin season. So what you can see here is we are in Bitcoin season and we're very heavily in Bitcoin season. And all this means is that Bitcoin is in very much in control of the market. I mean, look at Bitcoin dominance here, guys. Look what it's doing. It's just rallying and rallying. The more uncertain the macro scene becomes, the more Bitcoin dominance just rallies. And you remember how I made a video for you all maybe, when was that? Maybe 3 days ago. I can't remember, like 3 or 4 days ago or something like that. I told you all that Bitcoin is the best place to be in right now. And everybody was like, no, that's dumb. We're about to fall out. It's about to break out. Well, look at it. It returned back up towards some of these highs. So us targeting Bitcoin has only played out in us outperforming the rest of the market. And so while Bitcoin is in control of the market, while we're so deep in altcoin season, and while Bitcoin dominance is climbing, I'm going to allow Bitcoin to determine what I do with alts. If Bitcoin I think is going to go up, I'll use that to kind of determine what I'm going to do with my alts. If Bitcoin I think is going to go down and I'm going to take some profits or just kind of wait it out, I'm going to do the same thing with my alts. And I'm going to continue to do the same thing over and over and over again. And so that's kind of my strategy. Now, is this going to apply to every single person? No, of course it's not going to apply to every person because not everyone is in the same position. For example, my average cost on Bitcoin is down here. My average cost on Bitcoin is right. I'm not going to be able to get it exactly, but it's right here, right? So my average cost on Bitcoin is roughly $32,000 because I was doing huge purchasing at the top of the last bull market. I was doing even bigger purchasing in the bear market, and I've done some buying on the way up as well, which of course, big buying brought my average cost all the way down here, and I lifted it back up throughout this bull market. So I am still comfortable taking profits up here because that's what it is. It's profit. But if you are somebody who say bought at the very top of this and your average cost on Bitcoin is $99,000, maybe taking profit here doesn't make sense. That means you just need to be in a hodl mentality. You need to just hold, accept the fact that you purchased near the top of this macro move or this, midterm move and allow this bad boy to play out. It's probably better to still be dollar cost averaging. So no, it's not going to be applicable to everyone, but I'm not here to tell everyone what to do. I'm just here to tell you what I'm doing. And my strategy is to buy in the 50% line right here. Boom, buy in the green box right here, take profits in the red zone until something changes. And nothing has changed. And so I'm going to continue to do it. Right. And that's my kind of my thought process here. Now, looking at the total market itself, or the total, this should be altcoins. So looking at altcoins, the picture still remains the same. Altcoins are clearly just underperforming. So do you see how Bitcoin was at the top side of its descending channel? Well, when you look at altcoins are still like, they're not up there, right? They're all the way back to what looks to me like the 25% threshold, if I had to guess. Let's see. Roughly. Yeah, right. I mean, basically at the 25% threshold right here. So they're just underperforming. And so that's why, like, yeah, I'm going to take some profits off Bitcoin. I'll take profits off altcoins, but that's why I'm not like doing a ton of analysis on ETH. I'm not doing a ton of analysis on Solana because it's like, I just don't focus. I'm not focused on them right now because they're not nearly in control. Now, yeah, I'm going to, in a second here, we're going to look at what's happening with ETH. We're going to look at what's happening with Solana, and I'll kind of tell you what my strategies are going to be in the future. But right now, it all matters. Bitcoin's all that matters because Bitcoin is a representation of the market while we're seeing a ton of macro uncertainty. Okay. And so that's kind of what I'm doing. So, yeah, I think that's that for the most part. My strategy, again, just taking some profit off here, about 1% to 2% of my total portfolio. And just going to let it play out. If we pull back to the 25% threshold, which are the 50% threshold right here, or if we pull back to the 25% threshold right here, I am going to do some re-entry. If we do break out, I am going to wait for this thing to establish macro structural clarity, and then I am going to likely enter on some sort of like 5 to 10x leverage long trade with the stop loss set below that breakout retest low, which all makes sense if the time comes. So that's kind of where I'm at. Yeah, I think for the most part, that's that, guys. So I will do a little bit of rapid fire technical analysis on a bunch of these other ones like Solana, SWI, and all that in a second. But let me show some stuff to you real quick. I know you guys comment on it decently often about kind of the fact that everything I do is strategized. And the reason why I'm so like just kind of set that you must have a strategy and you must stick to it is because the strategy is the only way to create a real winning investor, in my opinion. Now, if you are someone who wants to kind of start taking those steps moving forward, and I'm talking to you, the person who feels a little bit like you either lack confidence or you lack consistency. So you make moves, but you're not confident in them, or you're just not consistently winning. What I want you to do is I want you to check out the link to the school, which is linked down below. I did just open up 2 more spots at the executive tier, if that interests you. But what we do at the school is very simple. We take crypto investors like yourselves and we give you the tools to develop strategies, just like this very simple strategy that I have right here. Because a strategy is what creates a winning investor. Someone that I define as someone who is confident with everything that they do and is consistent with their wins. That's what I think a winning investor is. And so if you're someone who wants to get confident, become consistent in this crypto market, check out the link to the description down below. And again, the best part is if you don't see growth, if you don't learn anything within the first few hours, guys, I'm literally just going to give you your money back. Simple as that. So feel free to check out the link down below. And while you are down there, there are a couple other things you can check out. I do post a ton of behind the scenes footage over on my Instagram at TylerHillYT_ and on my Twitter at TylerHillYT as well. Last things last, if you guys do like educational based stuff, I do have a link to my YouTube channel that is more education based. Tyler Teaches Crypto. It is linked down in the description below. I have 2 videos over there that just talk about only strategy. So a bunch of stuff for you to check out. Feel free to go do that. Now, to finish off the video, let's do some rapid fire technical analysis. And I'm going to just look at each one individually and tell you how I feel about each one. So I'll tell you, would I be willing to buy it? Would I be willing to sell it? Would I be willing to take profit? Now, remember, I am only basing my decisions right now off Bitcoin, but I know some of you don't do that. So I'm going to give you my thesis or thought process on each one of these purely based on just looking at them, starting with ETH. When I look at ETH, okay, I actually would be willing to do some dollar cost averaging here. Not a lot, but some. And the reason being is because it is in this zone. Now, I want to ask you guys, what do you think? Remind me, what is this called? This yellow box. What is this called? Need to make sure we're all still on track. Because I know I haven't gone live in about a week. I need to make sure you didn't forget. What is this yellow box called? I know I'm a little bit delayed. Here we go. Okay, there we go. Golden government bowel movable tracker is crazy. Golden door. Almost. It's a different word though. It's not door. It is manipulation zone. Golden pocket. There we go. Great stuff, Felix. Okay, so this is the golden pocket, or in other words, the golden zone. Okay, and what this is the Fibonacci retracement level, the biggest and most important level of support that most cryptos will ever see throughout their lifetime. And the reason it's so important that you notice this is because that is where ETH is right now. If ETH is going to hold support, it's supposed to hold here. Like, if it loses this support, things may very well get more ugly than you could possibly imagine. And we're talking to the degree of ETH possibly revisiting the lowest lows from the bear market itself. Okay. And so, with that in mind, ETH should hold support here. So, if I was to remove all context, not think about Bitcoin, not do anything, just look at ETH, this is a level that I would be willing to do some dollar cost averaging at. Okay. Looking at SWI. SWI is another one where I would be willing to do some dollar cost averaging at it. Why? Because we had resistance, resistance, resistance. Now we're back testing it as support. And as we're back testing it as support, you can start to see what's happening here. We got this lower low, we got this higher low, and that's called bullish divergence. And so whenever you pair bullish divergence with a back test or an RS flip, there's a decent sized chance that SWI does try to build some support here and continue upwards. So what would I do? Do some dollar cost averaging. But if it falls below this zone of support, which ends around $1.96, I would kind of pause a bit to see what plays out after that. But I do think this is a decent time. Oh, yeah, good stuff. There we go. Now everybody saw it. Good. Timer tuber, Benjamin, good stuff, good stuff, good stuff, good stuff. Okay. So, yes. So, SWI, I would be willing to dollar cost average here. Looking at Solana. Solana is one that I would be hesitant. Of course, I'd be a little bit hesitant to dollar cost average one, but I would be willing to do it. And the reason being is because we had all the support, all the support, all this, and we lost it for a second, but we did recover it. And so there is reason to believe that maybe SWI is trying to create some sort of macro bullish structure. Maybe it is trying to create a bottom at this previous support, this previous point of support. And so I would be willing to do some small dollar cost averages here, but the fact that we did lose support here would spook me just a bit and make me remember that, SWI or Solana, sorry, at any given point could start coming back down towards some of these lower levels here, anywhere from say reasonably $82 to $76. So being aware that we could see Solana fall back here, I would just be very careful, but would do some small, tiny DCAs here. Okay. And yes, shout out. Yeah, Kirk, you get it. Everybody smash that like button. Okay. Moving a little bit along, looking at XRP. XRP is not one that I would be willing to do some dollar cost averaging right now. Maybe I do some little dollar cost averaging, but I wouldn't want to do any big dollar cost averaging. And the reason being is that it is in the top half of this descending structure. So you see how we're in the top half of this descending channel? I would be looking for it to get into the bottom half, like right here, like right here, like right here, like right here. You see how every time we dipped into the bottom half, we pumped? That's what I would be looking for. So for XRP, maybe some tiny DCAs in a super long-term multi-month or multi-year bag. But if I'm looking for like short to midterm, I would be waiting for this bad boy to hit the bottom side of the structure if I was going to do some DCA. Okay. While it's right here, XLM. XLM is one that I would be willing to do some dollar cost averaging on because it is in the bottom half of its own descending structure. So it is currently sat right around... There we go. It is currently sat right around, if I had to guess, like the 33% mark or something like that. Not the best time to be buying. Obviously, the best time to be buying is in this green zone, as history has shown, but not a terrible time. So I would be doing some decently sized buys here for XLM, but I would be saving some of my more cash if it can or when it can hit that green zone. Looking to, of course, as per usual, take profits in the upper half of this descending structure. So XLM is a decent DCA for me. Okay. Let's do SHIB. I'm not worried about. Pepe, I'm also not worried about. Both of them, I will say, like, yes, I would do some decently, like some small dollar cost averages because they are both Pepe and SHIB sitting on major support zones. The only thing about it is, though, we are very, very, very far away from a meme coin season, in my opinion. So I'm just not worried about meme coins right now, in the slightest. Looking at HBAR, HBAR is currently sitting on top or right around the 50% threshold of this ascending structure. So I would be doing some small DCAs here, looking to get the bigger ones in if it can fall to that bottom 25%, like it did here, like it did here, like it did here. Okay. And obviously taking profits around the top side of the structure. So small DCAs here, but saving some cash if/when we do see one more move back towards the slower portion. So, okay. There was one big one that I feel like ADA. ADA is now giving me a little bit of structural clarity. So what we can see is that we do have an ADA that is currently creating some ugly sort of something there, some sort of odd descending structure here, but it does seem to be on track and heading back down towards this golden zone. So I would just be a little bit careful. In addition to the golden zone, it also does have like that little ascending level of support that we can see from this little area and this little area here as well, and that's just only going to act as a magnet. And so for ADA, like I told you back here, I still feel the same way. ADA seems to be at risk at all times right now of pulling back towards 42 cents. So it's not one for me that I personally would be doing huge purchases on whatsoever, because there's just not much support between here and this golden zone, and the golden zone is going to act like a magnet. So ADA is one I would just kind of not really want to deal with right now personally. Um, Tyler, do you tend to use volume profiles to help your DCA decisions? Yep, sometimes I do. I do sometimes. I'm going to be doing a little bit more analysis on some ideas. I did obviously create my own indicator that does apply volume and all this stuff, but I'm still working on it, which is why I don't talk about it here on the YouTube channel super often. Okay. Any other big ones that we talk about a ton that I feel like maybe I'm missing? Jasmy is still not giving me any life. Not worried about that right now. ICP, the same thing. ICP is towards the bottom side of its own golden zone, so I would be willing to do some small dollar cost averages here. Just like I was willing to do some small DCAs here. Small, I'm fine to do some a little bit bigger than this DCAs here, but not huge whatsoever. But the fact that it's at the bottom side of this golden zone, it has a decent chance of pushing upwards, especially considering, again, you're getting this bullish divergence clearly printing. Very obviously. 3 lower lows, 3 higher lows. Guys, that's bullish. That's bullish divergence. I couldn't think. I was about to say bullish resistance. What the hell? Bullish divergence. So I think ICP might give you a little bit of a pumper here, but we'll give that time. I wouldn't be doing huge buys on ICP. And I did ETH already. All right, let's do Link. I like that one. So looking at ETH, or looking at Link, sorry. Obviously with Link, you can quite clearly see that it is interacting with this previous zone back here. So there's been several instances in which Link has interacted with this little slowdown there, this little support there, that support there, this build up here, and then where we are right now. And then obviously a ton of resistance to the top side right here. So there's a ton of support here for Link, currently sat between $9 and $12. And I would actually say I would be willing to do some DCAing in this box. Another thing to kind of support that is the fact that we are also seeing this represented by the top side of the golden zone. So it just means to me that Link is now entering a huge zone between now and $7 of a bunch of support. And it would generally surprise me if Link just smashes through all of this and continues lower. I'll be honest. Like, that would be it losing its bear market lows, which would just be odd. I think it would be more likely that Link would just go sideways here. And so I do actually think that Link is in a decent DCA opportunity. And when I do start looking to buy alts, Link is probably going to be one that I do accumulate here a little bit. I am back basically to my break even on Link. My break even on Link notoriously was this peak. And I don't know if you guys were here in 2022, but there were 3 instances that we hit my break even point on Link and we kept getting rejected off of it. It was so annoying. And then we broke above it, but now we're basically like right back down to it. So I'm just going to kind of leave this bad boy alone. But yeah, that's what I'd be doing with Link right now. Went over XRP, went over this one. Okay. And then, yeah, we can look at Doge really quickly. Again, though, I'm not really interested in meme coins, especially not Doge personally. I just don't. I'm not really. That's funny. I'm just not that interested in it right now. I will say though, it is kind of reaching this bottom, the ascending level of support that it has here, and it will be interesting to see if it does hold some support. I personally, if I was going to buy Doge, I would do a little DCAing here, but I would set a lot of my cash aside to dollar cost average if/when it breaks below that ascending. I said descending. I think this ascending level of support and comes back down to this bounce zone, because that is generally what happens. You have an ascending level of support, you break below it, you head to your bounce zone, you try to build some support there or on your golden Fibonacci zone, which is the exact same level, and then you'll try to build some support out of this to continue upward. So I would be quite aware that Doge very well might pull back another 20-30% still from here. So I wouldn't be doing huge purchasing, but just a little bit, considering we are sat on a support level right now. Okay. All right, cool. So I think that's going to do it for now, just for the technical analysis portion. Again, don't want to spend too much time focused on alts, because again, I don't think alts are kind of the big focus of it right now. And yeah, so just to give you a quick TLDR before we do go ahead and wrap up for the day, the crypto market's not in a terrible spot right now. It is pulling back just a little bit because we are seeing growing uncertainty here between China and America, especially with what we're seeing with Nvidia and Boeing. But the market does seem to be getting used to it, which is the reason why we're not seeing a huge pullback today, just some general pullbacks across some overextended ones across the market. Overall, though, I do like the fact that people aren't getting super over leveraged right now. If you do look at, again, like the fear and greed index, we're not getting super over leveraged. We are still seeing the market in fear. You look at, say, your RSI heat map as we went over earlier, and you can quite clearly see that for the most part, most cryptos are still in the oversold territories, most of which putting in bullish divergence, as we talked about before. And so because of this, it does make me confident that we actually do have a chance to see Bitcoin give us a breakout and actually give us a move outside of this descending structure. So that is exciting. But the reality of it is that we've not broken out of this yet. A lot of people think we have. I don't believe that we have. And we are still sat in this resistance zone, which is where I take profit. So that's what I am going to continue to do. So I am still taking a little bit of profit off the table here, but I do like our odds going going forward that we could find some sort of breakout out of this channel off of this low that we've already put in. So there's a decent sized chance that this was the low, and we will try to continue out of this. So overall, a lot of great things happening here in the market, but don't get too far ahead of yourselves. Don't fall into the trap. Don't get trapped here, especially by the wells and all the crazy influence, that we're seeing right now, because it is still quite dangerous. Okay, it is still quite dangerous, and a pullback here at any given point is very reasonable. So, with that in mind, that's kind of where we are. Again, don't forget to go check out that campaign that we are seeing over on CoinEx with the CET pool. And last couple things, don't forget, if you are someone who wants to become confident and consistent within this crypto market, check out the Crypto Strategy School. And if you want some extra content behind the scenes, follow me on Instagram at Tyler Hill YT, and follow me on Twitter at Tyler Hill YT as well. If you are someone who wants some extra educational content from me, feel free to go check out our school. And last but not least, I gotta do it. I gotta do it. Now that we are pushing towards the end of the video, if you are, again, let me get this pulled up. If you are someone who are experienced in this crypto market, you know what you're doing, and you are a trader who has traded and you will not do something dumb, check out the link to BTCC down below, guys. They just released isolated leverage, which is absolutely amazing. I hate cross margin. They just opened up isolated margin. Absolutely fantastic. And you can go get 10% bonus on all first time deposits between $500 and $100,000. That isolated margin is a huge step up for the platform. So I'm super excited about that. So feel free to go check that out. Thank you all so much for tuning in with me today. And I hope you all have an absolutely good day. See you, everybody. Peace.